Because when he decides to take action, when the Fed decides to take action, it will be too little, too late. So we get to the next meeting, right? 6-month annualized super core is at, let's say, 6.1, 6.2%. And the Fed moves forward with, even if they cut all the rates off the table and move forward with a rate hike, that still puts the neutral rate effectively below. We don't have a neutral rate. We'll have a negative rate, a negative neutral rate. So not restrictive, right? So then what, right? The next meeting after that, if inflation's continued to move higher, then they have to escalate, right? And it becomes an arms race like we had in 2022 of the Fed versus rising inflation, where they're like, well, we're going to do a quarter point, we're going to do a half a point, we're going to do 3/4 of a point, right? And then inflation doesn't care. It'll just keep going up because the money is there to push it higher, frankly. I just like how devoid of all reality these meetings are. Like, we have a shrinking population, growing amount of debt, productivity is flat, and rates are a byproduct. No risk is priced in. Yeah, that's accurate. And yet he's not, so a storm must be brewing. Japan gonna save us from our own... I mean, that's gotta be the hope. What, Japan goes to a quarter point, half a point? Let's hope their inflation is hot as fuck. They don't need to increase GDP. He just said, I mean, like, here's the thing. Like, so the Fed's like, okay, we're gonna raise rates. And here's our policy. Like, here's our policy goal, right? 1.8% growth. Right? This is the point at which growth becomes inflationary. So anything above 1.8% is going to be inflationary. And so the Fed was like, this is what we're going to target. We're going to get growth in 2024, 2025 down to 1.8 to 2%. We're going to keep it there. We're going to hit the economy with some ice and cool it down. They didn't do any of that. GDP for 2023 came in at 3.2%. That's 1.4% above the inflationary target, right? And then growth for this year, I mean, while moderating a bit, is not moderating anywhere near their target of 2.1%. And we look to be on track for like 6% nominal GDP, which is going to translate roughly to what we saw last year, 3.1 to 3.2. Still inflationary. Yeah. Cutting down the balance sheet. He kept it pretty low key. No, he was talking about slowing the rate of the balance sheet roll-off, which is maybe the last thing, maybe the only thing the Fed is doing that actually tightens financial conditions in any meaningful way. I just can't get it through my thick skull. A 520C? Nah. Get rid of the first number. Don't think about the first number, right? I should listen again. Yeah, that's... I mean, they're talking about effectively... They're talking about slowing QT, which is an even more dovish move, and cutting rates. Because they're afraid if they cut rates, they're going to hurt the banks. And so they want to ensure that they've committed to enough balance sheet roll-off that if banks need more reserves, they can step in and provide them. It's really bad. Don't forget about pulling back Basel III. It's Basel IV. It's just... Basel III is already in place. Basel IV is what they're targeting. But, yeah, he's been very wishy-washy on that. I mean, there's a lot of risk to the banks. The banks aren't in a position right now to increase reserves. Not at all. They won't be for years. And so all of the wishy-washiness is probably just like a delay tactic. That's why they're, like, well, we're gonna pass this through committees upon committees upon committees for years, because ultimately it's something that we want to commit to, right? Because it'll be necessary to keep the U.S. on par with the international banking state, but we're not in a position where we can do that right now. Market bullish because Daddy J-Pow promised a rate cut at every FOMC for the rest of the year. Pretty much. I mean, also market just bullish because we had a shitload of 0 DTE calls above 5,200, right? So once we broke 5,200, it was straight up. As far as how the market really feels and the moves that are being made, I mean, gold's at 2185. That's not a marker of confidence. Silver's up 230 points. Dollar didn't really drop much. Yields haven't pulled back much, especially for an FOMC meeting. And Fed fund futures still aren't pricing in 3 rate cuts, even though there's literally fresh data on the table that says 3 rate cuts. So, I mean, I think everyone's well aware of what's going on at this point. And informed participants are less likely to lean into more risk. But that can mean stagnant, right? And that puts us at risk for stagflation, which we've kind of been in anyway. We just don't admit it. For a long AMD entry, you want to go long AMD currently at 180, despite the fact that they guided down for the rest of 2024. That would imply that you think that the directors of AMD are lying to their shareholders about their performance for the rest of the year. Markets have historically crashed when rate cuts begin. Yeah. Do you see gold rallying much more after recent gains? As long as currency risk is compounding, then gold should move up because central banks will continue to buy it. Also inflation. I don't at this price, but I'm not sure how low I should wait for it to go. I have a buy order set for 160. I mean, are you buying it or are you trading it? If you're buying it, I mean, AMD is currently massively overvalued. You're paying for a lot of future earnings that may or may not come to fruition. If you're trading it, it found some support today on its lower trend. They're pretty close to its low trend. I would say if it bounces back up above 183, it can maybe run again. But that's not the same thing. Might be a good entry for a long fixie position. I don't think just yet. I mean, it's pretty obvious that they're still going to push the rate, like the Japanese terminal rate, closer to 0, right? And as long as bond buying persists in the JGB market, we're probably going to see yen move down, continue to move down from where it is, which is already pretty significant in the last 2 days and is only getting worse. It's almost back where it was at the bottom of November. Pretty close. So there might be better entries on that. Tell me how bad Tesla will dump. Tesla's bouncing right now. Ooh, it's retesting gamma neutral too. Yeah, I'm not entirely sure. I don't like a short on Tesla here at all. Tesla closing above GN today. GN, not GM. Let me find out. Oh, ding ding. So GN is at 72, so it's over gamma neutral. Delta neutral is at 77, so still under DN. If it breaks delta neutral, and I mean, call buying really hasn't picked up very much yet, but it's starting to. If it breaks delta neutral at 77, it could run as high as like 190 to 200, I would say, over the next couple weeks. Gamma max is at about 200 right now. That would move up. Yeah, I would say 190. 190 is like a soft target. Before you go, shouldn't BOJ news suggest that banks can't leverage up the carry trade so they can lose some of their pumping power? They can leverage it up, but they can't leverage it as efficiently because they need to act in the stead of the Bank of Japan or the Japanese Ministry of Finance in keeping the yield curve under control. So, say they could leverage 10 to 1 before, and the Bank of Japan was there to absorb the impact of that on the yen. They now have to absorb that impact themselves. Yeah, so slightly reduced margin, because some of that money is going to have to go back into JGBs. But if Japan were to raise again, there is no way to get back to a 0 rate, right? And that starts to expose risk. I mean, the move by Bank of Japan to choose between 0 and 0.1 was very, very smart because they no longer have to commit their reserves to stabilizing the yen. Anybody who wants to leverage the carry trade has to do that for them. So they get to pass the cost of that off, right? which, you know, I'm sure they're very worried would affect their relationship with foreign financiers, but that kind of becomes the cost of doing business. I mean, obviously, the spread is still very wide and very advantageous. It is just less advantageous. Instead of it being, you know, 5.43, it's 5.33 that could fluctuate to 5.23. And if they raise rates again, then it's just solidly down because rates would be inherently positive across the entire range. Even if they try to pin rates to the lower end of that range, they would still be positive. That's why the announcement from Bank of Japan today in the middle of the Fed meeting was so interesting. Oh, XSP works the same way SPX does. So it's the difference between spot and strike. And yeah, I've let them settle before. So you have like XSP call, say today, right? So you had a 520. And we closed at like 522, right? Or 522. This will just settle for $2 times 100. Can you clarify if you think 52.65 is more likely to happen for a pullback to the 51.75 ballpark, or is it a toss-up? I'm trying to cut some stuff not yet at risk. I will say this much. Tomorrow's expiration looks quite bullish. There are calls from the 52.25 level that incrementally ramp up to 52.65, but the transition from 52.50 to 65 is still kind of weak. The downside is quite well defended. So 52.20, 15, 52.05, 5200, plenty of in the money calls. Below 51.70, the chain still flips bearish. There's not a ton of in the money call positioning like there was, but there's still a decent amount. But let me go into some of the data from today instead of just talking endlessly about the horrible mistakes that our Fed has made. So this puts us kind of right at the top of our bullish range for the day and above the near-term trend. We could mark another trend here at the top of the day from the prior breakout. However, I think this still has room to go up. If we go out to my like actual TA chart, that one's just for options data. I would say that we probably have range into the end of this week up to the 52.67.40 test by the end of this week, which is roughly where the options positioning is topping out right now as well. So I would say that that's pretty well supported. 5GT calls tomorrow if we don't just open at 52.50. But we'll see. I mean, obviously we'll check and look at, you know, leverage and see if that's still declining. There are other factors in the market besides just Powell, right? Many of the mega caps, I think a lot of people feel have topped out as far as their valuations go. I know there's some contradictory statements to that, but it's very clear that participants are pulling back their bullishness everywhere, right? Even on today's news and announcement, we didn't really move up all that much. You know, 90 BPS. You know, this is not like a 300 basis point day or anything like that. The additional options on the chain are really only pricing in like another 85 BPS of moves, and then, you know, and then the options just kind of falls off after that. We're still seeing a shift in vol, right? We're still seeing some interest in getting some of that short vol pulled back. And so like we could see if those changes continue to persist. But I would say that, yeah, initially things are going to be pretty bullish. Commodities down, dollar down, yields fairly stable. Looks like the dollar might be kind of finding a floor here at 103.40 again. Correlation turned around, but just a little bit. Then that's true on the 3 and the 1 month. So dispersion still hasn't recovered or anything like that. Yield curve turned up a little bit. Forward yield on vol down. not too much change in the carry trade. It kind of deleveraged and then, risk back on almost immediately after. Remember, if they leverage up the carry trade more, that's going to tighten financial conditions, right? And so keep an eye on that because that pushes the dollar higher. Uranium up, yeah, that's a commodity index. It looks at like a bunch of different commodities and aggregates them. Skew was up a little bit yesterday. 60% of the S&P trading, 66% of the S&P trading over its 20-day average. And then, this didn't actually shift that much, about 1%. So a little bit more short vol interest. Something I do want to point out though, gold shot up a bunch. I think mostly with the Bank of Japan announcement. Both with the Fed decision and then further on the Bank of Japan announcement. Tested 2191, which is a new high. It's been very, very stable above, 2150 over the last couple of weeks. If currency risks are elevating, which they would, with Japan collapsing the carry, we could definitely see this move higher. So keep an eye on that. Also, as just an indicator of risk, a runoff in RTY is possible. I would monitor that. It's probably going to outperform NQ and ES, especially if it starts squeezing off the larger part of the short positions. Now that the Fed rate decision is behind us, are you increasing your beyond position? I bought a little bit today when we were kind of at our lows. I picked up like 5 more synthetic longs yesterday. I still only have like 30 contracts total. I'm not gonna allocate like a shitload of leverage to it, right? It's highly risky. But I've got about, I don't know, what's that, like $3,000 in it or so. I might put another 2 in over time. Or, on confirmation that it's continuing to move up and it looks like it's stably staying on reg show. I do want to stay long it until the ETF FTDs start to come due. So I'll probably do that. Are my 4050 Ps toast? I thought you had 4500 Ps. They are for now. I mean, I'd roll them if you plan on keeping them. It's expired out of the money. Oh, Jesus Christ. Wait, hold on. Never mind. How did 4500s expire out? You just held them through the whole run up? You're just lying to me, popcorn trader. Moody's downgrade coming on no confidence in the Fed. That's an outlier that could be considered, but it's probably going to be more centered around budget talks in next month, I think? Do we get it this month? Does anybody know when the next hearing is for the budget? How far did we push it out? April or March? I've watched my Jan 2024 4000 Ps go from plus 800 to negative 400 per contract, but I still have faith. Yeah, those ones that far out really don't move around a lot. Wait, are we buying fake meat calls again? I picked up a couple yesterday and today. Not a lot. That's shelf offerings I don't like. But at least now I don't have to worry about markets going down and dragging the price down and providing liquidity, right? Also went up for BNED by 10,000%. Well, BNED's never going to go up 10,000%, probably. But it did go up 17% today, which isn't too bad. It seems like the BOJ's maybe had enough of this. If they move to a positive rate, it could absolutely impact the yen much more. The 0 rate didn't really do much. In fact, it lowered the yen. All right, thank you guys so much. I will see you bright and early tomorrow for the next leg of our bull run, right? All right. Have a good night, everybody.